Hi, and welcome to the Trading Pit. My name is Lundy Hill. I'm a veteran commodity futures trading. I came from the pits of Chicago, where I was a local trader in the Treasury bond pit in the late 80s and early 90s. This is not financial advice. I am not a financial advisor, and past performance is not necessarily indicative of future results. Today I'm going to be giving a weekly review of some of the hot charts that I have found this week. First of all, let's cover the Dow. The Dow was down over 3,300 points in just 2 weeks now. Wow, that's an 8% drop. It's good to know that my Rubicon system has been short for 9 days. So it's caught a little bit of this move. Caught a lot of bit of this move, actually. Of course, past performance is not necessarily indicative of future results. The top in the Dow was tipped off in late February with the breakaway gap that I've labeled A. You can see that it broke below those key lows there and had dramatic follow through down. Then after some sideways congestion at B1 and B2, we get first a bearish engulfing bar, and then second a 2-bar flip-flop, which is a complete reversal of sentiment. Price follows through down and is unable to rally significantly and then forms a wedge, which is delineated by the green lines. Further dramatic downside action takes prices down another 1,750 points, where I think it hit a temporary bottom Thursday. At C, down at the low, we see what's called a 99%er. This is a complete reversal of sentiment again, where you have a dramatic down move on day one and the next day gaps up and has nothing but buying coming in and reverses that gap and closes on or near the high. Also, Friday reversed 3 closes. So this leads me to think that we've got a temporary bottom in on the Dow. Of course, that's barring any geopolitical or economic black swans, which are always possible, especially now. Next, let's go to the hot market everybody's going to be talking about, gold. Gold's going to be on everybody's minds. The big news here is gold reaches all-time highs and breaks above $3,000 an ounce for the first time ever. As the saying goes, the value of gold never changes, just the amount of dollars it takes to buy it. So this is a reflection on the dollar losing strength. Thursday was the dramatic move up. This is called a yum-yum. Thursday was a yum-yum break of those previous highs back in late February. It had immediate buying off of the open and closed almost exactly on its high. A yum-yum is a wide-range, decisive break of a previous resistance or support level, and we definitely have that in gold. My Rubicon trend following system has been long since the first trading day of 2025. So that's nice. And again, past performance is not necessarily indicative of future results. Year to date, gold is up $359. That is a 13% up move in less than 3 months. So there's still plenty of time this year for a rally, a fall, or both. Friday had a narrow range clear out bar. This is a bar that goes above the previous day's high, then comes back down and closes below not only the open, but below the prior day's high. This to me tells me that a pullback could be coming. Now I've had a target of 3160 for a few weeks now. This is a wave projection of the prior's up move. I still think that is in play. Next, let's go to another metal. Let's look at copper. Copper fulfilled a call I made in late February. That is shown here. After a nice rally to start February, price reacted to the Fibonacci 50% level in an ABC pattern. That's not labeled. But it then spiked much higher right there around February 26th, I believe is the date. After that, copper had one move down to make an ABC DE correction. I actually called for the down move to end on an ABC correction but we had another leg up and another leg down, and then that formed the bottom around March 4th. So kind of a reverse head and shoulders there, and my target was around $4.93 up there. We note that the first top at the previous high formed a 3 drives to a top pattern. This is labeled 1, 2, 3. This typically happens where prices try 3 times at a new high and they fail. And then that's what happened. And then prices reacted into mid-March quite dramatically back down towards the 100-bar moving average. Since then, prices rallied up dramatically, reaching our target. It's formed a small ABC pattern before continuing on up for a slight new high. But I think you've had a pretty strong sell-off. You've got that one wide range down bar. I think we've got some more downside action coming. And I'm going to wait for an ABC down pattern before I make any other plays. Next, let's go to the 30-year Treasury bonds, where I used to be a local in the bond pit in Chicago. Bonds have been below their 100-bar moving average since the move below it in October of 2024. A failed test in early December and February of this year just further confirmed that the 100-bar moving average is definitely in play. Prices recently have formed a head and shoulders bottom spanning back to November. I've labeled this left shoulder head down at the beginning of 2025, and then the right shoulder in February. In late February, price penetrated not only the neckline, but also the 100-bar moving average. And it did so with a yum-yum move above the downsloping 100-bar moving average. The downsloping moving average tells me we may or may not reach the target, as is always the case. But until that moving average turns upward, I would be very leery of putting on too big of a position. Recently, prices formed an ABC correction, which takes us back down towards the 100-bar moving average. This is not labeled, but being so close to the moving average and right near that clear out bar that happened on Thursday, which was the second bar back from the current bar, this presents a very nice asymmetric trade where you can risk $1 to make hopefully $2, $3, or maybe $5 with a stop below that clear out bar and also below that moving average. Finally, let's go to the drug of choice, coffee. This year's coffee has had a nice 30% rally from the end of the congestion after the late 2024 rally. After peaking, hopefully temporarily, at $4.30 at the beginning of February, prices pulled back orderly to a Fibonacci 50% level around $3.70. I think it could be forming an ABC correction here. Oop, I have that labeled B. That should actually be C in the box. So that's an ABC correction with C hopefully right around current prices. If so, a wave target puts the price around $4.50 to $4.60. An equal wave is projected up to $4.85 level, but when taking profits, I don't like to be greedy. That's why I use a 75% take profit point. That's the weekly review for this week, March 14th, 2025. I hope you found value in this. If you did, please leave a like and a comment below of what you enjoyed. Have a great day. Thank you.